everyone, this is Matt with the Fundamental Investing Institute. Thank you for tuning in. We're going to talk today about one of the three basic financial statements, and that's the balance sheet. And in the last concept brief, we talked about the accounting equation, which is assets equal liabilities plus equity. The balance sheet actually follows that format. So on the balance sheet, we have our assets, which are the economic resources of the company, and then we have the corresponding financial claims against those assets. And those financial claims can be liabilities, that is, they can be money that is owed in the future or some delivery of goods and services that we have an obligation on, or we have equity, and that the equity, of course, is just the owner's claims. The balance sheet is important because it's showing both our current resources, which are current assets, and those are assets that can be converted within a year or an accounting period, depends on the business that we're in, but usually it's a 1 year period. So these are the assets that can be converted to cash most quickly. Then on the asset side, we also have longer term assets. These are mostly going to be our fixed assets. These are going to be like trucks and buildings and equipment, those kind of things that are going to have economic value beyond a 1 year period. Then on the liabilities in the equity section, liabilities similar to assets, we're going to have current liabilities, which are the obligations that we need to settle within a year or an accounting period. And then we have longer term liabilities. So maybe we have a mortgage on a commercial real estate and a commercial building, and that would be a portion of that would be current, and then the balance would be long term. So we can have both current and long-term asset liabilities rather, and then we have the owner's equity side, and those are the claims, the residual claims of the owners of the company. Generally, unless we acquire a business, we're not going to have a lot of intangible assets. So most of the assets are going to be physical assets or receivables, things like that. Another thing with the balance sheet, and this is really important, is the assets are on the balance sheet at cost. So we actually don't have current market values on those assets. So if we are looking to sell the business, or we are looking to think about selling specific assets, the carrying value is not necessarily what we're going to sell it for. So we'll go into these concepts a little bit more, but today we just wanted to introduce the balance sheet, the basic format of the balance sheet, and just get everybody familiar with the balance sheet as one of the three financial statements. Thank you for tuning in. We look forward to seeing you next time.